Welcome back to the channel, guys. So today we are gonna be looking at how to trade ranging market. So buckle up because it's gonna be a roller coaster. Now, what is a ranging market? A ranging market is a market condition where the price of an asset remains within a relative narrow range over a period of time without exhibiting a clear upward or downward trend. Now, this is what I'm talking about. So you can see that prices are actually moving bottoms to tops. They are playing bottoms and tops, resistance, support. Prices are playing resistance and support. Another way I like to classify ranging markets is an indecisiveness between the buyers and the sellers. This means that neither the buyers nor the sellers are actually in control of that market. So what do I mean by the buyers nor the sellers are in control of the market? So when the sellers are in control of the market, that means that that market is actually in a downtrend. Now when the buyers are in control of that market, this means that the market is in an upward trend or an uptrend. So when neither of the buyers nor the sellers are in control of the market, this market will definitely range. Now this is what I'm talking about by a range. You can see that the market is going to resistance, support, resistance, support, resistance, support. Now, how can you identify a ranging market when it has just started in order to get those trading opportunities? There are traders that trade ranging markets and there are traders that don't trade ranging markets. Now, most traders don't actually trade ranging markets because anything can happen in a ranging market, you understand? And a ranging market sometimes, most of the times, defines a movement of a new trend. Whenever you see a ranging market, especially on a higher time frames like the weekly, some people like the scalpers use the daily, or the day traders use the daily. I'm a day trader, so I use the daily. So when you see a ranging market on those higher time frames, any time frame that you consider that as a higher time frame, and you see a ranging market, most times it signifies that a new trend is about to be formed. So especially when markets range on higher time frame resistances or support zones. Hope you're understanding me. So this is an example of a ranging market. Now, how can we trade ranging markets? So ranging markets, so I want to give you an example. Let's say that these were the first, like this one. Let's say that like this was the first bottom that has been formed, and this is the second top. Now another top, another bottom. Now what is this? So far we are seeing a double bottom and a double top. So far it's not yet a ranging market. So okay, and another one has been formed, another bottom has been formed. Now this is the third bottom and this is the third top. Now this is the time that you draw your line. So you draw your zone right there, and you come right here, you draw your line right there, and you draw your zone. Make sure that it is catering for all the bottoms and the tops. So what are we waiting for? So when the price reaches this support zone right here, as you can see, this support zone right there, before you actually get in your long position or you get in your trade, I use the RSI. So for those of you guys that don't know the RSI, just come into indicators and strategy, type in RSI, relative strength index, strictly relative strength index, and then tap in it and it will appear on your screen. Now this is what will appear on your screen. So what am I talking about? If you see a divergence, so I'm going to give you an example right here, guys. So you can see that, let me first remove this. So what am I talking about by a divergence? So you can see that right here we have what? We have something like an equal low which is an equal low. And then if we look at our RSI, we can see that we are having a divergence to the upside. Now this is actually sketchy, but I'm trying to give you guys an example. So you can see that our RSI is actually diverging to the upside. Now this is a plus. So if we see our RSI diverging to the upside, this means that the sellers have lost momentum. The momentum that prices used to come, that like the sellers used to bring this price to this support zone, has actually reduced, and the buyers are gaining control. This means that these buyers are actually gaining control to push the market back to the upside. So after we have seen our RSI being diverging, we are at our support zone, then we are waiting for an entry trigger. Our entry trigger will be, for this case, our entry trigger will be a bullish engulfing pattern. Or if you don't see a bullish engulfing pattern, you can either use a doji or you can use a hammer. In this case, you can use a hammer. So after seeing any of those three entry triggers, you can get in your long position and make sure that your stop loss is just below market structure. Give it a little buffer, give it a little breathing space, and then take your profit just before this recent high. The recent high, it doesn't matter whether the recent high was somewhere here, but make sure you take your profit before opposing pressure comes in any case that you are trading in. And if prices come back to this zone, you can look to get in once again. You look at your RSI. If your RSI is diverging again, okay, RSI is diverging, that's a plus. We are at resistance, that's a plus. You see selling pressure coming in. And what do I mean by selling pressure? By selling pressure, I mean you see a shooting star, you see a bearish engulfing pattern, then you can bring in your short position and look to take your profit before the buying pressure comes in. Put your stop loss just above market structure and give it a little bit of breathing space or a breather, and then get into your trade. Same thing right here. Look at your RSI. Is your RSI diverging? Yes, that's a plus. Are we at support zone? Are we at a support zone? Yes, we are. Wait for an entry trigger. What is our entry trigger? A bullish engulfing pattern, a hammer, or a doji. So if you see a doji, you definitely get in your long position trade. Put your stop loss just below the recent market structure, which is this one right there, and then make sure you take profit just below the opposing pressure comes in. And you guys know that the opposing pressure is if you are in a long position, which is if you are in a bullish position. A bullish position means that if you are buying, then make sure that you take your profit before the resistance zone. And right there is your recent market structure that led to the change of structure from the uptrend to the downtrend. Take an example. If you observed this ranging market on a daily time frame or on a weekly time frame, so let's say let's assume you observe this on a daily time frame. Now you hop onto your hourly time frame or your 15-minute time frame, and you see something like this. If you see something like this, guys, let me first remove this. So if you see something like this on a 15 on an hour, so if you are on a daily and you see something like this on an hourly time frame, then you don't get in your trades as soon as this price comes into your resistance zone. First wait, because most of the times when prices approach a resistance in this kind of manner, this this could result into a break of this resistance zone, because prices are exhibiting a series of high highs, higher lows, high highs, high highs, higher lows, high highs, higher lows. So you can see that we are in an uptrend in a lower time frame. So this, if you see a different trend on a lower time frame, you see like a definite trend on a lower time frame, first wait to get in your trades. So what I like to do in most cases, if for example on the hourly I want to see things like, I want to see something like this. I want to see prices come back and fail to break through this. So when prices fail to break through this zone right here, which is my new resistance zone, what am I waiting for? Remember, I'm on the hourly time frame. I'm waiting for an entry trigger. If I see a failure of break of structure right here, I'm waiting for an entry trigger. So as I told you guys, our entry triggers are 3 in each case, either on a bullish or on a bearish state. Our entry triggers are 3. So for this case, we are waiting for what? For a shooting star. We are waiting for a bearish engulfing pattern, or a doji. So most cases, if a doji is formed, I want to see the next candle open. So I usually get in onto the next candle open. So we can see that our double top has been formed, and I have my shooting star here. Let's assume I have a shooting star right here that has been formed. I have a shooting star right there, and it has been formed. Sorry, that's the worst shooting star I've actually seen. So you will pardon me guys about that, but I have my shooting star there, and it has been formed. So I will get in my short position straight away, put my stop loss just above this structure, and then look to take my profit just below opposing pressure may step in. So that's how I actually like to trade scenarios of different market structure on a lower time frame. And the other option that you can do is, if you don't like trading double tops and double bottoms, you can draw your trend line, because I like using trend lines a lot, and my strategy consists of trend lines a lot. So you've drawn your trend line, and what are you waiting for? You are waiting for a break of this trend line. So if prices come back right here, what are we waiting for? Remember, prices are exhibiting a series of higher highs and higher lows. We are waiting for a retest. So when we get a retest on this zone and we get our entry trigger, same thing, we wait for our shooting star to be formed, or a bearish engulfing pattern. So if our bearish engulfing pattern is formed, let's say our bearish engulfing pattern is formed right here, then we get in our short positions, we get in our sell positions, put your stop loss. Let me first remove this. Put your stop loss above market structure. Always remember that, guys. And then look to take your profit before opposing pressure comes in. So make sure that your stop loss is just above this structure right there, and look to take your profit before opposing pressure steps in. So a live example about a ranging market, I'm going to give you guys an example. So I have here an example. It's obviously a cherry pick. So you can see that we have what we have here. We are seeing prices doing what? We are seeing prices moving from bottom, top, bottom, top, then bottom, top, bottom, and then top. So you can see that the Euro USD was actually ranging for about, let me see, about 11 days. So if you wanted to trade this Euro USD in this kind of state, as I told you guys, let's say that we've actually realized that this is a ranging market somewhere here. So we see that we are at our support zone right here. As you guys can see, these small dots, we are at our support zone right here. So what are we looking for? First, we go on to our RSI. So what is our RSI telling us right now? So on our RSI, we are seeing a little bit of divergence. Let me hope you guys can see that. A little bit of divergence to the upside. But onto the price action, we are seeing what? Equal lows. So the price action is actually portraying equal lows, but the RSI is actually diverging to the upside. So what do we do in this case? Before actually we get into position, we are waiting for our entry trigger. So our entry trigger for this case on the 1 hourly we don't have. So let's hop on to the 15-minute and see. So the 15-minute, what are we seeing right here? So we can see that we had a beautiful shooting star right here. You can see that this shooting star prices actually pushed all this fun, then the buyers came in, but I wouldn't get in right there. So after you saw this bullish engulfing pattern, you can see that this one candle actually, this candle that you see right here, that green candle actually covered both of these two red candles. Let me hope you saw that, guys. So as soon as you see that ASAP, get in your long position, put your stop loss just below and give it a little buffer, even if it's 2 pips, and then look to take your profit before the opposing pressure comes in. So make sure that you take your profit before opposing pressure comes in, guys. So you can see that this could have been a beautiful 1 to 2. So you wait for prices to approach resistance. So you can see that as soon as prices reached this area, you got a doji. So what I like to do, especially when I'm trading ranging markets, I like to use one-to-ones, especially in ranging markets. I like using one-to-one. So in this position, we can see that we had a doji right here, and then a bearish engulfing pattern right there. So we had a bearish engulfing pattern and a doji. That's a plus. Let's look at our RSI. So what is our RSI telling us, guys? So looking at our RSI, our relative strength index, we can see that we are having a series of what? Equal highs. So what is price action actually telling us? So looking at price action, we are seeing a series of higher highs. So our RSI is actually telling us that the buyers have done what? Have lost momentum. The buyers have lost momentum and the sellers are gaining momentum to push this price to the downside. So what do? We've had our doji right there. We are seeing our doji. We are seeing our bearish engulfing pattern. Obviously, the next thing to do is to get in our short position. So get in your short position right there. Make sure to take profit before opposing pressure steps in, and then stop loss just above market structure somewhere there. So the other trick that I want to share with you guys, because this trade didn't actually hit take profit. So in a ranging market, what you do is when prices get to your 1-to-1, right? So let's assume prices go to a 1-to-1, like somewhere here. Move your stop loss. move your stop loss, move your stop loss, move your stop loss to somewhere there. So after you've moved your stop loss, let's assume that this is your stop loss. So this is your stop loss. You would have got out with a profit still. Markets would have stopped you, but you would have got out with a profit still. So the next trade would have been this one. So same thing, look at our RSI. What is our RSI telling you? So this time we didn't have a divergence. As you can see, we didn't have any divergence, but we had an entry trigger. We actually had an entry trigger. So we had an entry trigger, which was a beautiful engulfing pattern. So this trade actually took quite a bit of time, but you would have got in your short position, obviously. And then after this bearish engulfing pattern has been formed, put your stop loss just above market structure, take profit just before opposing pressure comes in, and let's see what could have happened on this trade. Where would we have got filled? So would have been in this trade for about let me see, about a day and 6 hours. So a day and 6 hours would have got filled somewhere there, and then go out with your 1 to 5, risking $1 to make $1.50. That was a good trade. Same thing right here. You can see that price has approached resistance, gave you a shooting star right there, gave you a doji right there. You'd have got in your short position and look to take profits. Get in your short position, look at your RSI. Look at this, RSI was already diverging, guys. If you could see, RSI was actually showing that this price was what? This price was ready to move to the downside. You can see that RSI was already moving to the downside, and price action had not yet actually done that. You can see that we still had something like equal highs, something like higher highs. So we had a nice beautiful divergence right there. You had your entry triggers, and then bring in your short position, because that's all that's left to do. Just after this shooting stars happened, take your profit before opposing pressure comes in. As you can see, opposing pressure came in right, so it may come in somewhere here. Take profit right there, and then stop loss. Give your stop loss a little bit of breathing space, at least somewhere there, and then a 1 to 2.59, you are risking a dollar to get $2.59. So this was a beautiful trade, guys. This was a beautiful trade. But another case, guys, you should also remember that ranging markets are, you ain't always going to make profits. Because taking an example, you can see that right here we had everything aligned. Literally everything was aligned. You can see that our RSI was diverging. We were at resistance. We had our entry trigger. So you got in your short position, take profit before opposing pressure comes in. Stop loss, give your stop loss a buffer, but obviously this trade would have got you stopped out. So and this is a big one, guys. So this is not 100% winning strategy. You have to know that there will always be losers and winners in the forex market. So make sure you carry out your back testing, especially in ranging markets, and make sure you optimize. For staying tuned up until the end of this video. If you like the video, make sure you hit that like button, and definitely make sure that you hit the subscribe button and hit the notification bell, such that whenever I release new content you will be notified. So thank you guys for watching this video, and I'll see you guys in the next video.